In a 1970 style scarcity market, you get violent moves down, you get violent moves up. We had zero rates and inflation was 2%, and that's when Bitcoin thrived. But at the end of the day, you need the power. You need the power. Power is the most important component, and that's why Elon is focused. I think the software names are going to be under attack again, but this time when they go down, I think Bitcoin is going to be going high. I mentioned Bitcoin miners. They are a part of the equation. And for the people that run the Bitcoin miners, trust me, this is a good thing now that the world is out of compute.
This matters because when everything lives in the cloud, everything is more exposed. Security risks increase. Dependence on centralized infrastructure increases. And for many use cases, especially in an AI world where agents are running more tasks autonomously, businesses want systems that are closer to the user, more secure, and more controllable. That is why edge computing is becoming more important. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
To that point, I wrote a report this week, which I'm releasing on the subscriber website this weekend, which is all about edge devices, so he talks about the need for edge devices. And what people need to realize is we're transitioning away from just cloud data centers, and things like Mythos make it more important for you to have both on-premise and edge approaches, because if everything's in the cloud, everything's going to get hacked. So people need things secure and on their own thing. It's why Mac Minis and Mac Studios and all these things are gone, partly because of the CPU needs, but partly because of the demand from OpenClaw on the agentic side. This report was meant to show people, and when I went through it, I think there's 13 verticals of investments, and there's about 5 names per, so I have about 68 names within there. Some of them are very similar to the thematic portfolio list I have that people have seen, but a lot of them are names, like you said. There's chips that have to deal with radiation, because the one thing that's constant in space or down here, you may not need the same sort of, you don't need gas turbines, you don't need things like that. You have the sun, but you still need semiconductors, you still need chips, which is why it's called a terafab, because he's trying to replicate very quickly or as fast as he can what Taiwan Semi, he wants to get started right away. So he's out there saying, and I'll show this over the weekend, he's trying to secure the parts already. So number one, is he going to be capitalized? SpaceX is going to be fully capitalized, and whether he takes 75 billion or 100 billion, the estimated cost of the terafab is about 25 billion. So he just knows in his mind how many humanoids he thinks he's going to be producing and what he wants to be able to produce each year. What people have to realize about the part that you were mentioning, which I believe in. So I believe eventually when enough investment happens and we actually have humanoids, we will solve the hardware issue. But we have to get to the point where we have enough chips to be able to feed the humanoids to be able to do this. We need a power to be able to do all of that. And so what Elon is saying is, I know how many humanoids I need. Once we get into space, it'll be much easier to secure the commodities that we need, whether it's on an asteroid, whether it's on the moon, wherever it is. And you're starting to hear these conversations more and more. I think the most important thing of listening to Elon Musk at this point is 2 things. One is he believes that, and most people do at this point, for the next phase of all of innovation, space is critical to that. So that's the first thing. The second thing is, when you read through it, his timeline is just compressed. And that means from an investor standpoint, I like to find situations where there's a problem of supply and demand, because at the end of the day, companies make money on margins. And if supply and demand is out of balance and you get margins, that's what NVIDIA's lived on still with 70% margins. So I care about margins, but what I really care about is, what is the likelihood of this particular trend lasting for an extended period of time? So I don't need to be bailing out of things. I want secular movers. Apple was a secular mover. The Mag 7 were secular movers. I believe that hardware names that have a dominance in this, that have an isolated thing, lithography, very tough to have competition. The semiconductor makers, very difficult. I think it was Dylan Patel said, because we've run out of chips, every chip is going up. It doesn't matter which semiconductor thing. Now, is there a bubble component of this? Episodically, these things will fall 20, 30%, like Micron did. And then Micron went right back to the highs very quickly. So I think people just have to get used to a market that trades differently. In a 1970 style scarcity market, you get violent moves down, you get violent moves up. That's why when you give a data point that's from 2018 to 2025, and I go, we seem to be in something that's a little bit different just because of what's happening with semiconductors, but what do I know? So in the Dwarkesh Patel interview with Jensen Huang, Jensen made it very clear. if you take Anthropic's needs now, so when you see a revenue run rate that looks like this, that is about demand.
Insane.
So demand is going at a pace we've never seen before. The reason we're running out of chips is because of that chart. Well, that chart can only slow down because we don't have enough AI compute. So when we say chips, I don't have a problem because Elon has said we're going to have a bunch of idle chips that people have purchased sitting around this year, but that's not because of price coming down. That's because we don't have the power.
Yeah.
So again, when you say all these things, I'm going to bring it back to, in the history of mankind, you need whatever innovation happens. Eventually, you're turning electrons into some output. In this case, it's tokens. So Claude is raising the prices of tokens right now for enterprises. And you had the Uber CTO basically come out and say, we can't afford this. That never happened. I'm running out of usage. So we're clearly at that compute shortage time. Now, you can say chips. That's great. But as Jensen said, there's three components to this. There's the chips. There's the engineers that make the chips more efficient, which is what the Chinese did with DeepSeek. But at the end of the day, you need the power. Like, you need the power. Power is the most important component. And that's why Elon is focused not on getting away from the foundries. And again, he's going to build the foundry. Who's the fastest, most capitalized builder of competition? It's Elon.
100%.
And he's saying it's going to, I mean, he needs to do a massive size. That's why, to your point, I forget anyone who's raising VC money. VC money was meant for software. These are large scale investments. Part of that interview with Jensen Huang, he talks about his biggest regret. His biggest regret was not investing in Anthropic. But the reason he didn't invest in Anthropic at the time, as he talked about, was I didn't have that kind of capital that they needed, because the dollars that OpenAI just raised, $122 billion. It's bigger than most S&P 500 companies. So those dollars being raised are because we need hardware, we need power, we need data centers. And those data centers are being delayed by politics, they're being delayed by energy, they're being delayed. So the bottlenecks that you're talking about to get to there, that's all well and good. It's far more complicated and it goes down. And if the Chinese say no rare earth for anybody, that's why this thing is a geopolitical game of commodities. And I don't want people to I don't want them to underestimate the risk associated with supply shortages at a time. We have not lived in that world for most people managing money or going through. Most people are sitting in growth assets. If we can't get enough compute, what happens to these companies that are spending all of this money? And those bottlenecks can be power, they can be GPUs, they can be CPUs, they can be DRAM. It sounds like what Jensen is saying, I got plenty of GPUs. GPUs are not the issue. The issues are the gas turbines, the politics of where the data centers are going to be. We need more power. And that's why when you go through Terafab is to make chips to supply humanoids, autonomous vehicles, but also space data centers. He wants to go raise this money in terms of SpaceX to take that money, go build the Terafab, because he knows we don't have enough power on the Earth for what I need, and I need to go into space to get it. And he's not the only one that's saying that. This is a very complex.
Visser's point is that Musk understands something many investors still underestimate. The next era of innovation is going to require enormous amounts of capital, power, and hardware. The logic is straightforward. If Earth becomes too constrained in power, in land, in regulation, in supply chain flexibility, then space becomes part of the solution. Whether that means asteroids, the moon, or orbital infrastructure, the long-term vision is clear: access to more energy and more commodities. That is why this matters to markets. If the cost of building the future is enormous, then the winners will be the companies and platforms that can secure supply early, scale fast, and dominate the infrastructure layer.
So I think because there's not a single, let's say, asset that I talk about more on this show over the last year than Bitcoin, I'm going to give you I'm going to give everyone watching my rationale behind this. So number one, I have a macro belief that the end game is about AI disrupting everything, and people getting angrier and angrier about the disruption that comes from deflationary innovation impacting their jobs and their ability to survive, and the government's need to provide the debt to keep them happy, but that debt keeping inflation at higher levels. So everything we talked about today, if I'm right, we're at a critical moment. That critical moment is that if inflation goes above where the Fed has rates, this is a new situation again. I mean, we're back in the 2010 to 2019 period where we had 0 rates and inflation was 2%, and that's when Bitcoin thrived. So I believe the conditions, which are not about negative real rates, but they're about a situation, the only way you have negative real rates is kind of this dystopian type situation where people are not happy and they're not making as much money as they think they should. That's the first thing. From a technical perspective and an Elliott wave perspective, I believe we have just finished a correction, and I've been waiting patiently to kind of build off the lows we made at 60,000. But it was correlated with software. And the reason this is important for everyone listening is I believe that Bitcoin, from an investor standpoint, is most similar to technology. Even though it has a scarcity component, would make it much more like commodities, it's still viewed until, let's say now, in my opinion, as a growth asset. So it was correlated with software on the way up from the AI movement, and it was correlated on the way down. Something changed in software this week, and that's why I did this video. The subscribers who are in there, if you haven't seen it, go look at it. And I talked about we've hit an inflection point in software, and the reason is because Oracle's not a software name anymore. Oracle is a compute name. Yes, it is archaic in terms of it being software, but Oracle has something happening now because we've seen Nebius go up. We've seen CoreWeave go up. We've seen CoreWeave's CDS come down. We've seen the Bitcoin miners lead out. The ecosystem of the direct relationship between Bitcoin and the AI world is starting to act well. When you run out of compute, that is important for Bitcoin. That fits in with the scarcity argument. So do I think we're just going to jump out of here? No. Did I buy call options on MicroStrategy this week? Yes. Did I buy Bitcoin this week? Yes. Did I buy it last week? Yes. And the reason is because I believe that we're in the beginning of an upswing. MicroStrategy just broke above its 50-day moving average for really the first time since Oracle fell. It also has its 50-day moving average pointed upward for the first time since October. This is the way that I trade markets. It's the way I look at them. Could I be wrong? And could we go through 60,000 again? I guess, but I'm less worried about software having another every name falls. And I think we've now got to the idiosyncratic thing where the market is starting to separate scarcity software, which is what Oracle is because of compute. It's what the miners are because of them having the compute. That's a very powerful sign that you're seeing scarcity be treated differently. I think the software names are going to be under attack again, but this time when they go down, I think Bitcoin is going to be going higher. So I'm going to direct this to anyone who's running a private wealth management shop, an RIA, any FAs that are watching. By the end of this year, I do believe that you will need to have a very good narrative as to why this should be 3 to 5% of your portfolio. And I think the world is heading that way. You and I do this weekly thing, but when we started this, there was a mind share of, okay, you've been in one silo over here and I've been in the other silo, and we both believe that the merging of the silos is about to happen. I think you guys watching that enjoy the show should have the two of us come to your RIAs and FAs and sit in front of them. We can do the show together, but make it 100% about why Bitcoin. Because I think we talk about it as part of the context in here, but we're getting to a point now where we both know the network effects are kicking in. We both know that stable coins are accepted. We both know what's going on. I mentioned Bitcoin miners. They are a part of the equation. And for the people that run the Bitcoin miners, trust me, this is a good thing now that the world is out of compute. So I say this again, at some point you reach an inflection, the inflection of demand and supply. Anthropic goes through the roof. Their revenue to actually hit the 10 times that they're talking about, they need more compute. They just did a deal with Google. They did a deal with Broadcom. They don't have the compute. That's not compute that's as good as NVIDIA's compute. Why did they need it? Because it's already built. They need it now. We are at a point now where Bitcoin should matter, the Bitcoin miners should benefit, and they should benefit because the world needs to find things that are scarce when we're truly entering a period of abundance because of Mythos. So that's my cry out to them.
He believes that by the end of the year, institutions such as RIAs and wealth managers will need a serious explanation for why Bitcoin should represent a meaningful allocation, perhaps 3% to 5% of portfolios. Why? Because the macro environment is changing. Network effects are strengthening. Stablecoins are becoming more accepted. Compute is scarce. AI is creating new demand for digital and monetary infrastructure. Bitcoin is increasingly being seen as a scarcity asset in a world of abundance pressure. That is a powerful combination, and he makes one more important point. Bitcoin miners may benefit too. If the world is short on compute, then the infrastructure players closest to digital scarcity may see stronger economics. That means the market may increasingly reward the companies that sit at the intersection of Bitcoin, power, and compute. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.